Alright, let's cover AKRBF. It's a Norwegian oil company. They do deep sea exploration and they also do the production of oil, so bringing up barrels at quite the nice price. They're traded in Norway, they traded in Frankfurt, they traded in America, as you can see here on screen. And over time, there are always great opportunities to buy into oil company. Is this one of those? Well, let's look into it. For sure, there was an amazing opportunity in spring of 2020. Back then, as some of you might remember, oil price dropped below $0 a barrel. So it was negative. They were paying for companies to take delivery in that case. And oil companies was trading extremely cheap. I remember I bought another oil company back then. But once again, opportunities, they show up all the time. There could be one in the future as well. Recently, they reported earnings here. We can take a look at the presentation, some of the highlights. They had very strong operational performance. They had 2 billion in cash flow from operations. So this is on a, let's see if we can see the market cap here on one of the other ones. I think it was 161 billion in market cap and 2 billion in operational cash flow just for the quarter. And we see also enterprise value here, so it's a modest balance sheet. Management has a goal of leverage not higher than 1.5. So at current rates, this is somewhere 0.5, something like this. So very, very low leverage. Field development on track. There are plenty of oil fields and very interesting names, as you will see when we take a look further down in the report. And resilient financial position. This is the leverage that I just showed you guys on the other browser extension or opening side browser thing. Not sure how to say that in English. But strong production here, driven by high efficiency. This is what gets you $2 billion in operational cash flow for the quarter. Extremely high production efficiency, 96%, up 1%. Why is this? Well, they have a unique way of doing business, focusing on excellence, and the people who are part of suppliers, they get a part in the success if a project is successful, so they get monetizable value. And this drives efficiency, make sure that they're doing things on time. If there are an incentive to do things very, very well for their business partners, well, this will also cause results to be very, very well in many cases. Like Charlie Munger said, show me the incentives and I will show you the results. So this is quite interesting to know about the business model of AKRBF, that suppliers get to take part in the success. So huge incentive, they get a lot of things done on time. By the way, look at the names. Alvheim, Valhalla, yep, naming it after Norse mythology. Just that is making me interested to invest. Some emissions, of course, you gotta have this to get the fund money. Maintaining production at higher levels. Don't want to dip down, want to continue to increase. This is important for dividend safety. Development projects on track. So drilling, doing more construction in different parts of the North Sea. There's a specific slide for this where they show the different oil fields. We will get to that. But good volume here. So development, driving growth, and value creation. We're talking Yggdrasil, World 3 here in Norse mythology, Valhall, and then tieback projects at Alvheim. So this was covered in this case. So new platform here, new oil rig for drilling, and new area hub with several discoveries here. So some more development needed, some more capex needed to be done to fully develop this project. But why bring it up on the earnings call? Well, it's important to show pipeline for investors that, all right, there is future growth. We will be able to continue to grow dividend from oil fields such as Yggdrasil, where we estimate a very high amount of oil, because management has a goal of growing dividend at 5% a year in this case. I think they have a slide on this as well. So new volumes here, Yggdrasil, drill baby drill, like they say. Yep, future development to be had. So 2025 here, adding highly valuable barrels through exploration. Some other areas, köttkake here, this literally means meat cookie, so for March. Omega Alpha in August, and some more exploration drilling to be done in Q4. Let's go down a bit more to some financial highlights. Strong performance, the robust cash flow. Yes, it was 2 billion, and then dividend of 63 cents a share to be paid out. That will put them in line with dividend goals. Quite nice. And then we see the free cash flow per share, 24 cents. We compare this to the dividend, 63 cents a share. Okay, not the best comparison, taking a look at free cash flow and then the dividend, but of course dividend is a negative effect on free cash flow, because we have the cash flow from operations, and then you have the cash flow from investments and from financing. And dividend in this case is counted as negative cash flow being paid out. So that's why it looks like it does. The free cash flow number already is taking into account that a lot of cash is being paid out to investors. So no big worry in that case. The financials were solid for covering dividend. Just look at the income statement. The production cost versus the total income. This is very strong numbers. This is very effective numbers. This is cost effective compared to peers. And once again, taking a look at the cash flow, we can see, as I mentioned earlier, cash flow from operations. Yes, this is in millions, so this means 2 billions. And then cash flow from investments. A lot of dividend being paid out in this one. So 1.8 billion. And what we have left here is small positive cash flow, increasing the cash here for the end of the position. Balance sheet, low leverage. Oh wow, 0.49. Yep, remember, talked about this earlier in the video, saying that the leverage ratio was roughly 0.5. Quite good math in this case, if I might hype it up myself. But yep, strong balance sheet. They talk about the goal here as well, targeting below 1.5 over time. And they are well below that. They could borrow to do new development and still be well below this goal. It's nice to be prudent. It's nice to be conservative. Oil price is volatile. We saw a lot of states in South America borrow heavily under the assumption that oil prices would remain high, and as we know, a lot of them went insolvent, bankrupt, had to accept austerity from the IMF in that case. But just banking on high oil prices and then using leverage, it works very well in the short term, but it creates a long-term risk. Because sooner or later the chickens are going to come home to roost, and we will see lower oil prices, and then paying back on those loans might be difficult in the short term, and creditors will take advantage. They will negotiate higher rates, and it will be expensive for shareholders. So I'm all in favor of this leverage ratio being a bit lower. No need to load up on excessive debt, in my opinion. Investing in high return projects, well, we see the cost for the revenue, and we see the revenue, and we see that it is very efficient. And this creates a lot of shareholder value, this combination here. Now we get to the dividend part. Also mentioning here, ambition to grow dividend with minimum 5% a year. So as mentioned earlier, we can take a look at how they segment it, how they have paid some dividends, and the planned dividend here for Q4. So increasing it over time, and why not? Makes perfect sense. There's no need to do like Petrobras does, for example, and reinvest into areas that doesn't make sense for political reasons. This is a well-managed oil company in Norway. No need to do that. And then the other slides I don't find that important. We have the guidance, the disclaimers. We can stop the presentation right there. All in all, I think that the price is fair for this company. It's a little bit dividend growth, a little bit value. It's perhaps on the higher end in terms of price to earnings right now compared to how it's been historically, where it's been close to 10. Taking a look, I could see now 21. However, we also see that it has some development ahead with future oil fields that might warrant a higher price, as they can continue to cash in on more barrels being drilled and pumped out of the ground. And this will of course create a lot of shareholder value. Over time, stock price has not done a whole lot. They have paid out a solid dividend, of course, so this puts a dampen on the capital gains, return on capital, just the unrealized gains in this case, or losses. But this is a dividend play in the energy sector. It's a rather safe, boring company. I would say a stock like this is more geared towards wealth preservation and income, rather than trying to get rich and grow a fortune. There are plenty of growth stocks out there for that. However, for a person who's closer to retirement, whose income is a bit uneven due to the nature of their work and they want to supplement it, well then a stock like AKRBF makes perfect sense to take a look at, do some due diligence, and then if you like it, perhaps invest. That's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.